All right, well, thank you very much. Good morning. It's a pleasure to be here. And I'm going to do something a bit different from what you've heard so far today. I'm going to talk to you about the hotel industry. I'm going to talk to you about numbers. And I'm going to tell you what's been happening. So for those of you that aren't aware, STR, we are the market leaders in hotel performance data. And we work with more than 85,000 hotels globally. So we have a real understanding of what's happening across the industry. And this is what we'll look at today. I'll look at what's happening globally, then I'm going to drill down and look at Europe, obviously the home continent for most of us here. I've picked out half a dozen stories, which I hope will be of interest, and then I'm going to finish with a glimpse into the future, looking at 25 and beyond. So in terms of global performance, demand, so that's the number of rooms sold. So what we're looking at is the percentage change year on year for the number of rooms sold versus 2023. And you can see with the exception of a couple of months here and there, we are selling more rooms as a global industry than we were last year. And we're obviously already above 2019 levels. So overall, the industry is growing. We're selling more hotel rooms. How does that then translate into looking at occupancy? So what we can see here is the regional occupancy numbers for October year to date and the year-on-year percentage change. And with the exception of Africa and China, we can see that occupancy is still moving in the right direction. Here in Europe, we're enjoying a 1% increase year on year. But the important thing to note here as well is that Europe now has the highest occupancy of any region in the world. So we have got 71% occupancy, so the fundamentals are good. And if you look at average rate, exactly the same slide, but the percentage growth in terms of average rate, again, with the exception of China, which has obviously got a range of economic challenges at the moment, average rates are growing across the world. Here in Europe, again, 5%, so pretty significant, especially when you compare that to other developed mature markets such as Australasia or North America. So as mentioned, the fundamentals for Europe are pretty good. So let's look at Europe in a bit more detail and start with exactly that same chart that we saw globally, but just for Europe. And you'll see there are no declines. Every month we've been selling year on year more rooms in Europe than we did last year. So we're growing. And if we translate that into occupancy, average rate, and RevPAR, so revenue per available room, percentage change by month, you can see that it's pretty solid. It's pretty consistent growth that we're seeing. A little bit softer in April because we saw the shift in Easter dates, a very strong summer in August, but overall growing, as it says, in the right direction. And what we saw, actually, I'll go back there, what you can see there is stronger growth from a rate perspective than an occupancy perspective. And if we just think about that, the fact that occupancy is growing at all is really quite good because we need to take into consideration what's happening from a supply perspective. So how many new rooms are opening? And this is just looking at recent years by class. And you can see there's a higher percentage growth at the top end of the market. If you look at every year singularly, it's not that significant. But if you think about the cumulative growth, year after year after year, the fact that we're still selling more rooms year on year and the demand is outpacing the supply, it's a real positive. The industry is doing well. If we look by class, you can see here this very simply, this year, the higher the class of hotel, the higher the RevPAR growth. So you see their luxury doing really rather well. Economy hotels, though, are a little bit challenged, and we're seeing this across North America, Australasia, as well as here in Europe. And when we think about that and the reasons as to why, we put that down to what we call the price-sensitive traveler. So what we've seen is those people at the lower end of the income spectrum who have been more impacted by the cost of living crisis, by high inflation rates, by high interest rates, coupled with the fact that revenge travel is now done, it's not particularly surprising that those hotels at the lower end of the spectrum are struggling more to push performance, and we see that quite clearly. Another interesting factor that's happening across Europe is the growth of, or the returning growth of, the corporate traveller. So we all know as soon as people could travel, leisure came back really quickly. Everybody wanted to travel and stay and experience. Corporate demand took a little bit longer to come back, but where we're now seeing a greater increase year on year in performance is the weekdays. It's that Monday through Wednesday period indicating the continuing return of corporate demand. And if we look at that same chart, but for ADR, average daily rate, you can see again, it's growing more strongly during those weekdays. So again, corporate demand coming back quite nicely. If we look at things geographically, this is occupancy on a rolling 12-month basis indexed to the year of 2019. And really we've got three buckets. You've got the UK and Ireland in Europe back up at or above 19 levels. Southern Europe just 1 or 2 percentage points behind. And then the rest of Europe a little bit further behind, but again, still catching up as we know that occupancy is growing. And if we look at that same chart, but for average rates, really we've got a two-tier recovery here. Southern Europe doing really incredibly well. They've grown average rates significantly, led by Turkey, which is obviously there is some inflationary pressure there, but nevertheless strong growth, Greece, Italy, France, etc. The rest of Europe still well ahead of where they were, but Southern Europe has really done phenomenally well from an ADR growth perspective. And looking at our key gateways across the continent, you can see they're really year on year. The further east you go, the stronger the occupancy growth. But most markets are still moving up, which is really good to see. You've got a couple of flat or declining performance there. Lisbon, Dublin, that's supply driven. Paris, I'll come on to that more, but displacement because of the Olympic Games. But elsewhere, generally speaking, moving up. And then in terms of rates, again, you can see that north-south divide. If you look at markets like Madrid, Belgrade, Athens, double-digit increases year on year, whereas across Northern Europe, we've got pockets where performance is flat, and that is really happening either at the weekends or at the lower end of the market, going back to that more price-sensitive traveller that I mentioned before, but most markets growing. So overall, as mentioned, the fundamentals, Europe in a pretty good spot. And I've chosen now 6 key stories, I feel, across Europe to bring you today. And the first one I'll start with is in the UK, my home country. And I've put that the UK is in a privileged position. And the reason I talk about the UK being in a privileged position is because of the occupancy levels that are achieved there. You can see year to date, 78%, the key cities either high 70s, low 80s. So really very strong. But what you have to do is put that in an international perspective to really understand how well the UK is doing. So I thought, well, how best to do that? Let's look at the G20 economies. And you can see there the UK has the highest occupancy of any of the G20 economies, ahead of Japan, the EU, Australia, Italy, Korea, etc. So as a British national, I'm very proud to be able to crown the UK as the occupancy champion of the G20. And when you drill down into that a little bit more, it's really important to look at your demand drivers, your demand source. And you can see in the UK, it's pretty much 50% nailed on international versus domestic. So it's a really healthy makeup of demand that the UK enjoys. Again, that privileged position. And if we look year on year, you can see, yes, there are some markets that are suffering a little bit. But when we dive deeper into that, it's not because demand is down, it's because supply growth is outpacing demand growth. So we see that in Dublin, in Belfast, Manchester, Liverpool, Cardiff, Plymouth, a lot of the cities' demand being outpaced by supply. So for the UK, we have to consider that. Going forward, supply is likely to be the biggest challenge for performance. And our forecast, our estimation is that supply is going to grow at a similar level across the UK in the coming years. So we'll be looking at that carefully. So moving on to the second story, Germany. And I've called this the return of the Messe. So all of those big fairs that Germany attracts and does so well out of. But before we look at those, let's just look at Germany overall. And you remember back when I showed you Europe, you saw it was a sliding scale. Haven't seen that across Germany this year. It's really been fairly consistent, doing very well, even at the lower end of the market. And of course, we've had the European Championships, we've had a lot of concerts as well, but we've also had the Messes returning, really 2024 being the first full Messe calendar year since 2019. And if we just take 4 key German cities here, Düsseldorf, Frankfurt, Munich, and Stuttgart, and you've got occupancy and the percentage change from the same day the previous week. But what I want you to look at there is the axis. Look at the spikes, the peaks and the troughs. It's really quite considerable. And it's because you have all of these fairs coming in. So let's have a look at some of them. First of all, Düsseldorf, there's the Drupa fair. It's a printing equipment fair. It happens every 4 years. And this year it happened again. Look at the RevPAR growth that was achieved in Düsseldorf as a result of that fair going into the market. Really considerable. Of course, there wasn't a Drupa in 2020 for obvious reasons, but if we look back to 2016, you can see the growth this year was really good, but it wasn't quite as high as we saw in 2016, which is interesting. They're back, but are they back with as much of an impact? If we look at another fair, Automechanica in Frankfurt, every 2 years, again, really strong this year, but not quite as strong as we saw in 22. Now, the comparable versus 21, of course, perhaps not entirely fair, but it does show that they're back, they're doing well, but are they going to be as impactful as they were before? So we're keeping a close eye on that. And if we look forward to one that's happening next year in Munich, Bauma, look at the average rate growth that was achieved in 2022 when Bauma came to town. Really strong. And if you look at business on the books for next year already, you can see just how impactful that fair is likely to continue to be. The third of my stories, Viva la España. And I really want to touch on Spain because for me, this year, Spain has been the real standout market in Europe. So let's have a look at that. Let's have a look at occupancy in Spain. This is our baseline for 2019. Add in 23, we're pretty much back. And then 24, it gets a little bit better. So occupancy pretty much back across Spain. But that's not the story. The story is all about average rates. There's your 19 baseline for Spain. Look at the clear blue sky between 19 and 23. Now, that's not unusual. But what is a little bit more unusual is, again, we've got clear blue sky between 23 and 24, particularly in the summer months. Spain has done incredibly well. And if we look at it by class, again, luxury on 9% RevPAR growth, all other classes double digits. If you look by month, a little bit softer in April because of the shift in the Easter dates, but otherwise pretty much double digits. And if you look at it by city, it doesn't matter whether you're a resort or an urban city location, you're growing healthily. And average rates, well, led by Madrid, followed by Malaga, Seville. Again, it doesn't matter whether you're a city or a town or a resort, you're doing really well. Spain really is a bit of a standout. My fourth story is all about Paris. And I've called it Parisian pleasure and pain. And some of this data might surprise some of you, I think. But before we drill down and look at Paris, I just want to look at France overall, which has struggled a little bit more than some other markets year on year. You can see they've got pockets of strong performance there. Strasbourg and Nice doing well, but most markets are actually flat or declining ever so slightly. But again, once you drill down into that, you'll see it's all about supply growth outpacing demand growth. That's the case in Rennes, in Rouen, Dijon, Marseille, Montpellier, a whole selection of markets across France are struggling a little bit. And you'll note there, Paris, minus 2%. Now, you might be surprised. Of course, it hosted the Olympic Games, the biggest spectacle in world sport. So let's look at that in more detail. And first, we'll look at the pleasure, which was the games themselves. So during the games, Paris, 85% occupancy, rates, €773 average rate. Incredible level of rates being achieved. RevPAR at 661. And if you look at the year-on-year percentage change, of course, it was good during the games. Occupancy up 23%, rates up 126%, RevPAR up 162%, really strong. But we have to look at what's happened either side of the games, which is interesting. So this is the daily occupancy average rate and RevPAR percentage change. And look before, think back to before the games. The French authorities were basically saying, don't come, we're getting ready. So people that would have usually gone to Paris for their summer holidays, they didn't go there. And we saw afterwards as well, in the immediate aftermath, people didn't flock back to the capital. So if we take out the games, you get a better sense with the scale here. We had a period of about 3 months where performance was weaker than it was last year. So that is very typical with a mega event, you do get displacement. But the good news is that ultimately, if we look at business on the books, we saw Notre Dame reopening this weekend. Christmas, New Year looks good. So I expect by the time we get to year end, we process those December numbers, actually Paris a little bit better than we are at the moment. My fifth story is one that I really like talking about, and it's all about events. And what I'm going to focus on is concerts. Now, of course, we had the Olympic Games, we had the European Championships. Europe's had a great year for events, so it won't be as strong in 25. But I want to talk to you about one American lady, one British lady and two British brothers. So you might be able to guess where we're going with this. And we're going to start with Taylor Swift and the Eras Tour. Now, my title there says, "Thank you, Taylor, thank you," because as a global industry, we owe a great deal to Taylor Swift over the last couple of years. Look at the occupancy and average rate increases achieved when Taylor's tour came to town. Warsaw there taking top spot. We saw rates grow 140% and occupancy grow 30%. Absolutely phenomenal. And what else Taylor Swift did was she bought us compression nights. And then a compression night in a hotel is when it's north of 90%. And if we look at her UK dates there, you can see Cardiff reached 96%, Edinburgh, Liverpool 92%, London 90%. Amazing, really phenomenal performance. And as I said, we need to say thank you to Taylor as an industry. From the American Queen of Pop to the British Queen of Pop, Adele. She played 9 nights in Munich during August. And when Adele was playing, RevPAR grew 107% year on year. And if you look at the nights that she was playing, quite clearly you can see how impactful her concerts were on already a very successful hotel market. So we've had some really good stuff in 24. As we look forward to 2025, now this is a UK and Ireland story, but we have got Oasis, and they are reforming, and they are playing at a series of dates across the UK and Ireland later this year. Now, I really wanted to go to this concert, and my wife really wanted to go. So, like the good husband that I am, at 9 o'clock the morning that the tickets were on sale, I got into the waiting room, waited 3 3/4 hours, and then I got into the queue. But when I got into the queue, I was number 380,278. That's a screenshot from my phone. So I didn't get any tickets, but a lot of people did. And a lot of those that did are already booking rooms. So for the whole week that Oasis are playing, in Cardiff, we've already got 69% business on the books. This isn't for next summer. Manchester, Edinburgh, Dublin, 50%. So really strong, just emphasizing how important concerts and events are to the industry. The last of my stories before I look into the future is what I've called opportunity knocks, and where I see opportunity for the European hotel industry in the coming year or two. And the first one is all about groups. So transient demand came back really quickly, but groups demand didn't. But the good news is we're growing. Group demand is growing year on year. You can see there across Europe, it's outpacing actually US group demand growth. It's growing about 5%, so it's really quite strong. But we're still about 15 to 20% behind where we were in 2019. So there's a big gap there, and we really need these groups to come back. You think how well the industry is doing anyway. When the groups come back, it produces another big opportunity for our industry. The second opportunity is all about Asia Pacific, and most notably China. So 2025 is due to be the year that Chinese international outbound visitors exceed 2019 levels, which is great for our industry. But a lot of that demand is going to be intra-regional. It's going to be intra-Asian, first of all. So we believe it will be till 2026 by the time that arrivals to Europe from Asia Pacific exceed 19 levels. But look at that royal blue bar in the middle. That represents Chinese arrivals to Europe. Look at the jump from 24 to 25, and then from 25 to 26. It's really quite significant, and of course we're going to welcome those visitors back with open arms. And if we index on 19, by the time we get to 26, we see all of those key feeder markets across the Asia-Pacific region back up above 19 levels. So really important and another great opportunity for the industry. The final opportunity for me is all about supply. Now, this was the chart I showed you earlier, looking at supply growth across Europe. But I want to switch and I want to look at the pipeline now. And this chart showcases the percentage of existing supply in the planning and final planning stages of the pipeline. So we're talking a little bit further out. We're talking about two plus years before these rooms open their doors. And you've got some quite big percentages here for some of the top countries, but for Europe as a whole, it's about 4%. So it's not that much. If we look at that, but closer to the present day, and just look at in construction pipeline, so that's either the ground has been broken, if it's a new build, or it's due to open in the next year if it's a conversion, which of course in Europe, the vast majority of new hotels are conversions. And as Europe as a whole, it's only 2.7%. Now, of course, not all of those rooms will eventuate, and they won't all eventuate at the same time if they do open their doors. So for me, another opportunity for Europe is relatively low supply growth. Of course, some markets will see a lot of supply, but for Europe as a whole, it shouldn't be significant, which is good news for existing hotels, as well as those hotels that open their doors in the years to come. So 3 opportunities: groups, Asia Pacific, and supply. Now, to finish things off, a glimpse into the future, and I'm going to continue with the pipeline. And these are the countries in Europe with the biggest pipelines. So the UK remains the development hotspot for Europe with 96,000 keys in the pipeline. We then see Germany, 78,000, Spain at 34,000. Really, the bigger the country, the bigger the pipeline, generally speaking, not surprising. I wanted to mention Uzbekistan here, though, of course, as one of the sponsors. We're currently tracking 5,500 keys in the Uzbek pipeline. As 34 projects, but if you look at who it is, this is where it gets really important for me. It's the biggest hotel companies in the world. Accor, Hilton, Marriott, Hyatt, IHG, Wyndham, all have projects in the pipeline in Uzbekistan, which echoes what we've already heard today, that it's an attractive destination. These companies know where they think they can make money, where they want flags in the ground, and we're seeing that in Uzbekistan. But if we look at the cities, it's all about London, my hometown. 24,000 keys in the pipeline, a lot of new supply. Dublin, 10,000, and then we've got a lot of course, German, British cities. Istanbul, still a very attractive market for development. And also Batumi in Georgia, Black Sea Resort. We're tracking 5,000 keys there. Really an exciting and interesting destination which we'll be keeping an eye on. So that's what the pipeline looks like. What about business on the books, though? So looking at what's been booked versus last year, good news is, regardless of class, it's better than it was. So occupancy should be moving up across Europe. This is pan-European in the coming months ahead. So that's really good to see. And if we look at our key cities again, versus last year, more business on the books than we had, more rooms booked. Again, occupancy should continue to move up. Now, our all-important forecasts. Now, you're in quite a privileged position because these were only released last week, but this is where we expect 2025 to finish, RevPAR. Now, you'll see there are some declines there. They're mostly in Germany. That's going to be a rebound from the European Championships and from non-repeating messes. But most cities are still forecast to grow next year, their RevPAR, as you can see. So that's positive. And if we aggregate them and look at this in a combination, you can see 24 actually pretty solid growth across Europe. And then we're dropping down. For the next few years across Europe, we believe that we're entering what I call steady but unspectacular growth. So we're still going to be growing, but it's going to be low single-digit growth. Now, we have to think back to prior to 19. That wasn't prior to 2020, COVID, sorry. That wasn't unusual to see that level of growth. So we're a normalized industry once more, but the important thing is we are still growing and moving in the right direction. So I'd just like to close with a summary, very much focused on Europe. Occupancy, we're number 1 in the world. Highest occupancies are in Europe. Rates are still growing. Corporate demand is ticking up. And there's still a great opportunity with group demand, international arrivals, particularly from Asia Pacific, and a fairly limited pipeline. And don't forget, although it won't be as strong next year as it has been this year, Europe remains an event capital, an event mecca. We can host them, we always attract them, we will continue to do so. So you summarize that all, put it together. I think European hotel industry, we should remain very confident as we look to the future. Now, if you would like a copy of this presentation or would like to connect more on this data, please do email me, whether you're in the room or watching online. I'd be delighted to hear from you to discuss some of the data and the information that I've been through today. And with that, enjoy the rest of the conference, and thank you very much for the invitation. Thank you all.